All right, how's everybody doing? And this is a recording of the class for today. Unfortunately, during the class today, I forgot to hit the record button. So I will be spending the next hour kind of going over what we went over in class and loading this video up so that you all can have it. All right, so um again today we were talking about um everything we spoke about before with going from top down analysis all the way back to the lower time frames to figure out where we're going to go. We also ended up talking about the open range support, which is a part of the opening range breakout. Um, and then we talked about some different candlesticks. We were going to get into space and proximity, but we didn't get into that today. So we will save that for next week. Um, Planning out the trade. So I think we started on this trade with Humana, and we were just breaking this down from right here in this section right here without changing the chart. This is a 12-month chart. We can start here, and we can see that this structure right here, this is a market structure. We can see that this structure is respected, right? Now that we got this structure, we can go backwards on the time frames, looking at the monthly. We start right here. We start breaking this down, right? What are we breaking down? Where we come from, right? So technically, the first one will be like this area right here, right? This is where we come from, where this actually breaks this structure right here, and we can see that we're bouncing around in that area right now. Then we want to start moving up and going through all the other ones. So we'll have this structure right here as well, right? Which is kind of lines up with this little piece right here. But we have this structure here. Then we'll have this structure here. Then we'll have this structure here, right? When we're looking for these structures, um, the easiest way to kind of do it would be take these wicks off. Take the wicks off, then you can actually see a little better. We can go to the higher time frames and you can kind of see that as well. You see that up here on this higher time frame, we didn't, well, I'm sorry, this got wicks on it. I took the wicks off, so you couldn't see it. But scratch that last part I said. But we're looking for where we break out at and where we break down from. So this right here goes to here. This is where we broke down, and we can see that it's doing this. All these other targets are on lower time frames. As you can see, we can't really see any breaks here. We go down to the weekly time frame, and from the weekly time frame, you can do the same things again. Start breaking this down from each section. So we know where we came from, right? We can double click this, throw these wicks back on, and now you can see a little more detail. From here, what I like to do is make my channels or my premium discount range to figure out where I want to go next in the market. So I'm gonna start here, and I'll bring this line down. And what I'm excuse me, what I'm doing right now, excuse, is making a channel or a path to follow for this little area right here. This is just a small downtrend. So we can take that, put that there, cut that off, take this one, pull this one down. And this is more or less like symmetrical on the way up. Now, this is only for this small section because what do we know? We know that we're here at this market structure. We should be looking to move up and go higher from here, right? Um, so this would be a temporary downtrend, and we would want to mark off the bigger trend to the upside. And to do that, again, take these wicks off, get you in line, and now we're doing it this way, right? So we got that. We're gonna turn this one green, clone this, bring it all the way down here to the bottom. Well, we'll stop there on the close bar, right? Turn that red. Then I want the green one to the middle. It's roughly in the middle. And we'll turn that blue. And now I can fill out the rest of them. So I know that with the colors now, this is temporary, right? This is our major trend, right? So we take that. After we do those, then I would duplicate this to catch the higher time frame wicks, right? Or the higher wicks. I'm sorry, not a higher time frame, higher wicks. And I pull this one down, back down to this wick as well, right? Something like that. Then I turn the wicks on so I can see what I'm doing, right? So now we got all our wicks in place. We got our chart in place. Um, I like symmetrical, so I'm gonna take this top red line and I'm gonna slide it up to these closed bars here. And when I do that, you see it's kind of equal with what's going on up here already, right? So this is my premium discount range or my pitch for. And now I can use these spaces to figure out an estimated time to get to any of these spots, right? So our next breakdown or the next spot we need to look for will be right here, right? Will be 350, 350, 355, 350, right? We should be looking for long-term plays to get to 355, 360. How do we look for those plays? Or how do we now how do we look for the plays? How do we measure for time in the play? And again, we have an x-axis, we have a y-axis. All this right here are points that intersect. Same thing that we did in algebra class. We need to see or figure out where these points intersect as to where we want to get to these targets. If I'm going up from right here, right, and let's aim for one of the higher targets just because there's no information in here to deal with. But if we deal with one of the higher targets outside of this, let's say this 550 target here, right? Or even this 585 target here. Now I'm taking the forecast tool and then I'm pointing at that intersection. So this says 2027, right? Till 485. In 25 now, that's roughly coming up as in 2 years, we should be to about 485 on Humana. Makes a little bit of sense to me. Um, makes a little sense. So Next thing we can do is, after taking this, we know that we have a consolidation here. We can highlight that consolidation, and we can duplicate that to help give us a target. All right. So then 412 for a target, we could take our fib or our premium discount range from the top of the range down here to the bottom. Change this into gold just to make my life easier so I can see it. So we know that we're going to 412 or roughly 412. 412 will be the top of this wick. 411, 412 will be the top of this wick. So I can see this happening. Right, that's this right here. All right, so that's the target. So we break this down. We want to be in the 300 talk, 315 call, 312 call, 310 call, way before we get to 411. Right. So we can get in from now, and then we can even move this back, right? Because we was talking about a higher time frame, a higher target just now. Let's move this back real quick. So we talking about 411, right? I'm not 100% positive where 411 comes in at, but we talking 312. 312 right here is in 100 days, right? So I want to see 312 roughly hit within 100 days so you can play that. So if that's 100 days, then this is probably like another 100, 200 days, right? Use what we have to tell us what we're looking for next, right? So we have this situation. It's a double bottom. We got where we're headed to, 412. We got the target here. We just need to take some time to get there, right? We can see why this is roughly the target as well, right? We got this line here, right? Then we can clone this, slide this down some right to there. And you can see this area right here is the market structure. So we need to get back here and break this level. So we got this as our target, 412. Right? Break this target down now for us. We got to get to 411. Then I would think that we come back to like 312 and then take off again. So while I'm looking at this, I always want to start noticing things, noticing as much as possible, right? And me just looking, trying to notice as much as possible, there's a possibility right here, right? That later on, it could build a head and shoulders, right? We want to anticipate, be able to see these things ahead of time with anticipation. I'm just trying to pick a color because most of the colors are already taken. But boom, right? So we got that. We got this. And we got this as another possibility later on, right? On a weekly, looks wider than what a normal inverse head and shoulders would look like. Start consolidating these bars, and it starts making more sense to see those pictures, right? So we want to think outside of the box a little bit while we're doing all of this, right? And then this could possibly be what happens in some time, right? So that's how we're breaking this down. We have a full plan We just need to take our time and execute it. So we know that this is our first target. We know that once we break out of this, this is our second target. We know that this is our third target. We know that hopefully right here, we can start to short it, right? And come back down here to catch the rejection and run back up. Now, this doesn't have to happen. This rejection never has to happen. This could just keep going, right? This rejection don't have to happen. It could come off and end up playing out similar to what's going on with the SPY. So we go to the SPY, right? This is the same thing that I tried to anticipate with the SPY, but I ended up being wrong. And it's not bad that I was wrong because I was still looking for the upside. It's just it didn't stop like I thought, where I thought it would have stopped right here and then pulled back and kept going. It didn't do that. It actually just kept going. So same thing happened again right here last year, right? Where and you really can't see it on that time frame, but on the daily you should be able to, right? So right here, I was anticipating the same thing last year, and it just didn't happen, right? It just more or less ran up higher, right? Ran all the way this way before it came down, right? Back to here. Some people might have called that a head and shoulders, but I'm not calling it that, right? That's not what happened. So the same thing could be going on right here, where this isn't going to come back down to make no shoulder, right? And probably the most that's going to happen is this is going to come down because we just broke out from the higher trend, right? So maybe it comes back here to bounce and keep going, right? And then next reason I this happened already, right? We had a breakout, we had a bounce right here, so it's probably no reason to come back there too, right? Where there's more reason just to come back to right here, right? So we'll see what happens in the next couple hours when the market opens up. But this is how I would look at that. So go back to Humana real quick, right? We want to just be in anticipation for these moves. But again, this doesn't have to happen. This could just break out and keep going up. And then we don't get no pullback. But you should already be in calls where that has nothing to do with nothing, right? You have nothing to worry about on a pullback because you're in the calls already and it's going up. All right. So again, we're always looking for where we came from and back to where we're possibly going. So where did we come from? We got this double bottom here, boom, boom. So we should be looking for this move right here to the upside. All right. Next. Um, we can go to let's go back to the SPY for this one. And we were talking about opening range support. And opening range support is similar to the opening range breakout, except that we're just using the support rather than everything else that we talk about in that orb. If I were to come down here to a lower time frame, let's just select a random place in the market. Come off the extended time. We'll go to regular time real quick. Just pick a random spot that makes sense. I guess this area will work. So you got your opening ranges. We're down to the 15 minute. We grab the first 15-minute bar, right? So we grab the high of the first 15 minute, lower the first 15-minute bar. What we're waiting on is we need to see the market break above this orb and then retest it, and then we play to go higher, or retest it and we play to go lower. When we do this orb right here, we see that the market actually went higher. Let's take off the high part. This is our opening range support, right? What else we want to take would be the same opening range support from previous days as well, right? So we got the opening range support there. I don't want to do it there because it's too close. But we'll just do those two for right now. When you look at the opening range support, you can see how later on these levels end up reacting with each other, right? So we see that this is the support from, let's say, Thursday. This is the Tuesday support, and we can kind of see how it reacts to those supports. Even though it broke it, we can see that it's sticking close to it. So it's basically using that support as a magnet, right? Same thing here. Same support really being used as a magnet where price just keeps reacting with it. Then we see later on down the line, price reacts with it again, right? And it's breaking down from it. So we could use these open range supports throughout the market once we find one, right? And you might want to just label these to say what date they came from or anything like that. You can label it by double clicking on it, and then going to the text page. So you double click on it and then go to text, highlight it, then you can fill it out and basically just give yourself a description of the line. Let yourself know this is from the 15-minute orb on Monday or Wednesday or whatever the date was, just so that you could navigate and find these things with no problem. Um, Also, orbs can be continued as well, right? So let's say this is this is one orb right here, and this really isn't an orb, but let's make an orb. Let's say this is an orb, right? After we break out of this orb and we figure out, boom, we're gonna go higher. After we start breaking out and go higher, let's say that I don't know, let's say that this created the new orb, right? Because that was the high. So now we got an orb right here, right? You could treat this the same exact way and give yourself a little bit of a break from being in this trade or this actual ticker, and you could say, okay, we built an orb. I guess this is the full orb that I just measured. Um, but we can say that we have a new orb, right? And basically, I'm gonna trade it the same way as the other orb. So this is where I took my profit, right? Because the orb was down here. Makes the new orb. So this is where I'm gonna take my profit, right? And now I'm waiting until this shows its face. Are we gonna be inside of the range, or are we gonna break above the range and give us an entry? Well, this breaks above the range. Now, you could have took the trade and ran it up to there, but why chase it? Why not wait for the A plus setting, right? The A plus setup, right? So we know that this is where we took profit. Boom, it breaks through. it's like, yeah, we should get in, right? Here's you got to break out in the retest, but that's not what I like to look for, right? I want to see this break out and then come back for the retest. So boom, it breaks out. You got a retest right there. Then what? This is a pretty huge play, right? Get your breakout, retest, boom, right? This is 40-point play right here, right? And this is 40 points within maybe like 5 weeks. Let me see. One, 2, 3, 4, 5, 6 weeks. So 6 week play, and it took you to there. Then what happened? It dropped all the way back down, came right back to where we came from. Then what does it do again? It goes off, right? So we can follow this opening range, breakout, or support every time by doing the same thing every time. Once we get up here and we create another high, well, we just created another orb, right? And again, you can step away from this one, go to another chart that you've been charting and working out, and see that, okay, another chart might be breaking out of their orb while this one is coming back down here to fill this out, right? And so we just did from here to here. Now we're going to say, I ain't trading this until we pick a side out of each one. And then you might see this drop down here, and you could have played that short, but this happened too fast to even play it. Boom, it's coming back up. Boom, it hits the top of that, no trade. Pull back down, we still got no trade. Then it bounces up, boom. We can enter from right here, or we can enter on the bounce right there, right? Enter here, or enter off of this bounce right here, right? Then the market goes higher. So we just used this same orb, we just built on it. Every time it went, made a move up, we just moved that orb higher. We kept the bottom line. Now we got this whole situation here. If I'm just looking at this situation at a glance, right? This right here looks like 50% of this move. So we're going to check that out right now. And give or take, it's about 50% of this space, right? We bounce here, keep going higher, boom, finish this, come back down. We see we bounce right back off the top of the same point again. Then we start breaking down. And now we're breaking out again. So we broke out from right here. I want to say that this is a retest too, but we'll see. We broke out from here. We could be coming right back down to 265. I would hope to see us bounce at 585 or 565, but I hope to see us bounce at 585 and keep going from there. So as you're building the orb, as you break the high or you break the low, you want to take that line with you up to the target. After it hits the target, you want to get out the trade. Then you want to hold through the 50%, see where it's going to pull back to or bounce to or whatever, right? And after that happens, um, get back into play to go long. I apologize about the beeping. It should stop in a second. That's just a power bank for my computer um, charging, I guess. So, so yeah, that's about it with that, right? We just talk about we just talk about this downside here, and we also talk about going back to where we came from. talk about the opening range support and how you want to use that after we break out the support. Take that support and, or not the support after we break the high, or if we break the support, you want to move those lines down to those targets. Once we hit those targets, that becomes your new orb. You got a full one right here. Take that orb, draw the 50% in that. Wait for us to get a break out of it. Once we get a breakout and a retest, you got your entry, and then we go higher. And then what do we do to figure out how much higher we going? I apologize about that just popping up. But what do we do to go higher? We take the consolidation, right? We took this consolidation, clone it, take that, put it on top of this one. Boom. What could we say? We could have said when we get to the top of this consolidation, I'm selling, right? Then we had this, and then we had that, right? Gotta have patience for all this to work out as well, though, right? This ain't gonna happen in 2 seconds. So plan the trade and stick to the plan. All right. So that's that part right there. Let's go over this again. So if I come up here, we have trying to think about just about to show y'all. I think it was hmm, lost my train of thought a little bit just now. Uh it'll come back to me as I'm moving. So let's just keep going forward. Same thing that we do all the time with these candlesticks too. We know that one is going up, it's fighting whatever candlestick that's across from it. We know that we're in this fight right here, right? We beat 50% of this candle already. I can only imagine this coming back to 581 if we get a pullback, back down to the 50%, and then bouncing out of there, right? So that's another thing you want to remember. Remember to check to see which fight the candle is in with, right? Know that when it's in a fight, we're also adding up the rest of the candles that are in the fight as well. And when I say adding up, I'm just saying, let's say right here, we're over the 50% of this candle. So then if we take this candle right here, we see that we're over the 50% of this candle as well, right? So technically, after the pullback, this should be no problem to beat, right? We're dealing with this candle right here next to it, right? We go here, we can see that we haven't got to 50% of this candle yet. But what we can see is that 50% of this candle starts the bottom of this candle. 50% of this candle that starts the bottom of this candle, this is 599, right? So this is our 600 candle right here, right? So you want to just keep breaking it down like that. You want to know which candle is in the mix or in the fight at the time. And you want to keep doing it. Keep going to the left and pointing those out. Um, all right, so that's that. We talk about the significance of these channels that we draw. So let's go back to Humana since the channel is already there. And the significance of these channels that we draw is it is basically the premium discount range. So the premium discount range would be this. right? Where you have the discount range where you buy in. This is the median, and then this is the premium range. This is the range that you want to sell in. So this is broken down the same exact way, except that this is on a diagonal. So we got our discount range right here, and this should be opposite in colors. We got our discount range here. We got our premium range here, right? Now, the reason that these are opposite in color, the reason why the green is on the bottom is because this is where you want to buy it. You want to buy at the bottom, you want to sell at the top, right? So you want to buy here and you want to sell here, right? So that's why the range is colored how it's colored. So that's all this is. And the reason I can't use this is because I can't put this on a diagonal, right? So we use these lines, which end up being support and resistance to build out this same thing. All right. So that's that on the premium discount range. That's the significance of this pitchfork. We want to go back to where we came from. We want to look for um, major. I'm sorry, I can't. I'm the word just slipped my mouth. Market structure. We're gonna look for major market structures, right? If I was to take this market structure right here that I have, right, and I duplicate this. Matter of fact, I'm not gonna duplicate it because I don't want to shift it. What I want to do is extend it, right? So let me extend this to the left. I guess I can't do it while I'm highlighting both of them, but it's all good. Let's extend this to the left, right? And when we extend this to the left, you can see that where this lines up with basically lines up with the market structure, right? You can see it bouncing, bouncing, bouncing. So that's the market structure, right? Take that off, put that back, and we can see that, okay, we're lined up with the market structure. So you want to do this to analyze the chart. You just don't want to analyze this, like this section right here, right? You could to get like the smaller move, but you want to know what's really going on behind the scenes, right? Like, let's just even call this like a real life situation. I know some of my analogies kind of come off a little violent, and I apologize. I guess that's just like part of like the mentality from just growing up in those environments and stuff. But I think it's easier to see sometimes too when you kind of look at it like in a negative type of thing. You kind of put up those. I feel like if I tell you in a good way, you're gonna look at it and you're not gonna really pay attention to it. But if I tell it to you in a bad way, you're gonna look at it the same way that you look at bad things in real life, right? If somebody's behind your back, you want to be always looking over your shoulder and know what's going on, right? So with this getting ready to come up, um, and I don't want to lose my train of thought. What I was going to say, because I was saying we want to look at things like kind of negative, right? To just give us that fight or flight reaction, right? Um, what was I going to just do with that? We know this here. We know that this is a possibility to bounce up here. Um, Oh man, I was about to give y'all an analogy real quick with the whole fight or flight thing, man, but I it just really just lost skipped my thought process. Um, I just got a lot on my mind with when I'm doing these charts and stuff. So I want to just kind of remember all these steps to take every single time. But again, we don't want to just know what's going on here. We need to know what's going on over here so that we know what possibly could happen next here. Um, I'll figure it out what I was trying to say. I don't want to have to stop the video to do it and figure it out. But if I don't figure it out, I'll rewind this when I'm done and I'll go back to it and then I'll do a separate video just to point out what I was saying because I did just lose my train of thought on that one. Because it was a very real good point to make too about how the you want to think that whole fight or flight things just so that you are always ready to pull the trigger. So we'll get back to that in a second. Um, Anything else that I see within this situation right here that I want to talk about? So not really. So okay, we talked about going back to where we came from. We did the pitchforks and all that. We talked about premium discount range. We did the opening range support. And we'll get into some more plan and trade as we go along. Let's get into candlestick types real quick. So we got these four candlestick types is what I usually use right here. We got regular candlesticks, which you see right here on the screen now. These regular candlesticks right here tell one story. They tell sellers, buyers, right? And that's it. We go here to the Heikinashis. Heikinashie candles are going to tell us the trend. They're going to tell you to stay in the trend. You see, there's no noise in this. There's no red, green, red, green, red, green candles. This is just all green candles. And this includes the red candles that were in this situation going up. But this is just basically telling you stay in the play until you get the reversal. Now, Heikinashie candles, you want to see green candles with wicks to the top. You want to see red candles with wicks to the bottom. Anytime we see a wick at the top and the bottom of one of these candles, this is the indecision time. This is when the market is going to look to flip or take a pause, right? Anytime these doji candles happen or wicks on both sides happen on a Heikinashie candle, you want to go right into the orb, right? Once we get here, we don't want to make any trades until we get a full bar closed beneath this. So this one right here, we don't really want to jump in on it, right? This one right here, you don't really want to jump in on it. This bar right here that closes all the way under, you're good to go. Jumping on this one, and this is the money you get to make, right? After that happens, same thing again. We got the, the indecision candle. You take that indecision candle, and then you waiting again. We're not getting in on this bar, but we're getting on this bar, which is fully closed outside of this. After we get in on that bar, everything from here is a smooth ride. You don't want any wicks to the bottom of these Heikinashie candles that are green and going in that direction. You don't want any wicks to the upside when it's coming down in the red section. Every time we come to indecision candle with wicks on both sides. Do the orb. Once you get a closed bar outside of that, you hop into the play, and we can use our trend lines that should be already here as targets, right? So that's Heikin-Nashi. Then we got super simple. If all of this looks noisy and too much going on and you can't understand it, throw the line on there, right? Throw the line on there, you can then see what's going on in the market without all the noise. And you can also see where these levels are at. You can see where these breakdowns are at. You can see everything much easier with a line graph opposed to a bar graph. Last but not least, we have the hollow candles. On these hollow candles, the story that they sell is a little more intricate than just buyers and sellers. Um, I guess I could use this. I really was just trying to look for something with a little more, few more different combinations in it. Um, let's do off the SPY. I think the SPY might have a bunch of them. Let's go to the weekly. Boom. So this would be the best section to do it at, right? So we have the red hollow candle. We got the green hollow candle. We got the green solid candle. We got the red solid candle. So what does this all mean? All hollow candles are saying that the market is going up. Any hollow candle you see, these are just normal green candles that are going up. Any hollow candle, including this red candle, this is just a green candle going up. Why this one is red is because it closed below the candle that came before it. So because this closed lower than this piece right here where this closed at, this candle is red, but it's actually a green candle. So if I go back to the regular candlesticks, you see it's a green candle. It's a normal green candle. But in this case, it's a red candle because it's lower in price than the last red candle. So, I guess an analogy that I used with this was like you got boxers, you have the you got the heavyweight, right? And then you got like your welterweight. And even though the heavyweight lost the match and the welterweight won, the welterweight still can't beat the heavyweight, if that makes sense. So the heavyweight is still in a higher position than the welterweight, right? Even though the welterweight won their fight. So looking this way, first let's do this part one more time. We have a red candle, then we had a green candle that closed below the red candle, so that keeps this candle red. Going this way, we got green candle, green candle, green candle, then a red candle. But why is this green? It's green because it closed higher than this candle right here, right? So because this closed above this candle, even though it's a red candle, it comes across as being a green candle, right? This right here, had this bar closed right here, it would have still been a hollow candle, but have been colored red because it didn't beat it. Here's a perfect example right here. This is a green candle. This start going up as a green candle as well, but it stops short and doesn't close over the top of this. So we got green, we got a green, but it just didn't go higher than the last one. Then we got green, then we got green, we got red, green, red, green, green, green. And that's how you want to read these candles. So know that all solid colors or all solid candles are red candles. You want to know the position of the candle, then you got the green. And the green is going to tell you that, okay, even though it's red, it's higher than what came before. Same thing with the red candle. When it's hollow, you know that it's green. But even though that it's green, it stopped lower than the candle that came before. All right. So that's our candlesticks. Um, we want to add these extended hours in sometimes with the regular hours. You can only see extended hours from the daily down, or from the 24 hours and down. But at times you want to add those 24 hours in and put it on extended time so that we can catch all the moves that happen throughout the market in the after hours and the pre-market. Right? Um, what else do we have, y'all? All right, so I think I just ran through like the whole class just now. A little shorter time than what we actually took in the class. I'm gonna rewind the video and I'm gonna look back at that one part that I was talking about, and I'll add to that um, on another video. Outside of that, we did start talking about using Bitcoin to kind of, because it's all this market moves together. So if Bitcoin is dropping crazy, then we know that the market is going to drop crazy at some point. There is rumor from, and this is just from me years ago, researching and stuff, that at some point Bitcoin should decouple from the market, and basically Bitcoin should just become what the DXY is, right? And not saying that it's actually going to become the DXY, but it should decouple from more of the actual market movement into like that DXY zone at some point once they pass the law for the digital money. It's going to come. It's a bill in Congress right now. They just have to run through all the kinks to pass it. I don't think it's going to pass until next year. I think, or the end of the year, into this whole thing that I think is a possible recession happening. I think that's when the digital money comes into play. Once they crash the regular banking system, then they'll implement this one, and so-called things will end up turning back into normal life, right? So I'll go back over this video in a couple minutes, and I will add the part where I kind of lost my train of thought from a little earlier. Other than that, um, we just went over basically everything that we've been doing. Plus, I just added into that the opening range support. Um, we did our pitchforks. We added into today's lesson about the candlesticks, the different candlesticks that we'll use, and how to read them. Um, and yeah, that should be about it. Other than that, we want to go to practicing trading. We can't practice trading after the market is closed, but we can practice 24 hours a day using crypto. Uh, we use crypto here. You see, I was in this crypto play, and it actually kept going up. I'm still in the short. I'm gonna hold it and see what happens, but it's just a paper trade. So my target was actually right here, right? And we can see that we kind of keep going up. So we'll see. And again, this is paper trading. This is why it's paper trading. It's to practice. But in order to do it, come down here, and I'll close this out real quick so I can load it up again. Come down to the bottom of your screen, pop open the trading panel. When you pop it open, you get all these different sections. You want to take your paper trading one, click on it, click connect. They'll give you a certain amount of money. You can change that here. You can do whatever, right? This is a new feature right here with stocks and crypto and futures and all that to leverage it a certain way. Outside of that, take your trades, move your stop losses around, practice taking these trades the same way you would in the market. We know when we call out like consolidations, we said that take them consolidations and put it up to the next consolidation, or I mean, put it over top of that consolidation. It gives you a target. We could practice doing that, right? Practice taking your money at those targets, right? When those things happen, then you get back into the play and figure out your next move from there. All right. So more or less, that was the whole class right there. I did play this video for you guys in the class as well. Um, the video is right here. I just want to put the address on the screen so y'all can have it. Even though I sent y'all the address directly to your whatchamacallit. Um, you can put this directly in your notes or wherever. Give me 1 second. So this is the the link to the video. So you can use this link right here. I did send it to you all as well. So if you go to your messages, you can click on the link as well. But that's about it. And like I said, give me like another couple minutes, you'll see another video with me correcting the part where I lost my train of thought throughout the video. All right. So I'll load this up and check y'all out next class.